Hey everyone, today we're going to talk about some accounting basics. And it doesn't get much more basic than what is accounting. Now, I'm not going to give you some silly dictionary definition. You can go look that up on your own if you want. But how I think of it is accounting is like the diary of a business. All the intimate stuff that goes on gets recorded in one way or another. So this is why some people call accounting the language of business. If you speak accounting, you understand business. And that's the biggest reason I got into it, is so that I could understand what was going on behind the scenes, what made a business tick, what made it run, what made it fail or succeed. So the first thing I want to cover today is kind of just the different areas of of accounting. So I'm going to go over three main areas, and those are corporate accounting, public accounting, and investment banking. Now, you might say, investment banking isn't really accounting. I'm kind of lumping these into one section, accounting and finance, right? To me, it all falls under the same umbrella. The biggest difference, or at least the way that I've always kind of separated accounting and finance in my mind, is that accounting looks to the past and says, here's what happened. And finance takes that and says, here's what we can do in the future, knowing what we know now. All right? So let's jump right into corporate accounting first. Just to be sure, corporate accounting is not as seen in Office Space, if you've seen that movie. Nina in accounting. Corporate accounting, this is Nina speaking. It's not that. It is basically all the functions that go on in the accounting department of any corporation to properly track the books and everything that goes on. So the main functions you can think of are accounts payable, paying the bills that the business needs to pay to keep going. Accounts receivable, which is invoicing your customers to get money, hopefully to pay those bills. And payroll, which is managing all the expenses, benefits, in general, a company's largest expenses are its people. Now that isn't always the case, but that's why you hear so often how they're the number one asset, right? They're also the biggest expense. Tax is also another common department. Reason being, there's always somebody who wants your money, right? Whether it's a state jurisdiction or a local or the IRS, or even if you're dealing abroad, there's always somebody with a handout. And you could say, hey, you need to file properly on time and all that stuff. But also, if you have an expert, they can sometimes save you money and recognize, smart ways of doing things. And then the last main one that I focus on is financial planning and analysis, FP&A. That's more the finance side, and that's saying, okay, here's what the accountants did to close the books, and here's what we can glean from that information, and comparing it to budget, comparing it to forecast, all that kind of stuff. All right, let's move into public accounting. In public accounting, I would further break out, functions into audit, tax, or what you could call value add, and IT. So start with audit. Audit is what I started in at Ernst & Young, and the concept here is to take what the corporate accounting people did in their company and validate it to some level. Public companies have their finances available per the SEC regulation online. You can go look it up right now. And the idea here is that there needs to be a third party who verifies that information to a certain extent so that the public can rely on it and make investing decisions. Do I want to buy this stock or not? Tax is kind of self-explanatory, and we already went over it, but companies have to file tax returns. And the more complex and large a company, the more complex the returns are. So having a professional organization firm that can do this for you is beneficial. Let's say IT next, so information technology. This just has to do, I think, with the complexity of software and technology in general as business has gone on. So these firms are able to offer services that add value and help implement, I guess you'd call them systems that are just very, very complex. All right. And lastly, the value add. So the most common example of this is your valuation around mergers and acquisitions. So a big company has an intended acquisition they're going to make. How do you value that? How much do you pay for that? There is a lot of money in doing this properly, right? Because if you're Google and you're going to spend $50 billion or whatever it was on YouTube, maybe it was $5 billion, sorry. That's a lot of money. How do you come up with that? How do you know it's worth it? These are very, very complex calculations that happen. So again, big firm, a lot of expertise can be useful. I guess one of the biggest things to consider around public accounting is there's this fabled Big Four right now that refers to the four largest global firms: Ernst & Young, KPMG, PwC, and Deloitte & Touche. Used to be the Big Eight, so just remember that hopefully it isn't actually too big to fail, right? The better businesses continue going. But then there's tons of regional and smaller, even city firms, right? If you're looking to go into this business, I guess a lot of people consider that going to work for Big Four could be a very large resume builder, and you get kind of maybe bigger clients and that experience. The work-life balance is a little off, though. Let's just go with that word. And starting out, you're working a lot of hours for little pay in the, mindset that it's going to pay off in education and all that. And that's why I went into it, and I think I got that out of it. So in public accounting, the last thing is, I guess, whereas in corporate accounting, there's a lot of different paths, a lot of different functions, what you want to do, where you want to go, and you have to climb up the company how you see fit. In public accounting, it's generally a pretty straightforward progression. You start out as staff, you do good there, you move up to senior manager, and partner. And the firms maybe have slightly different words for these, but it's all kind of the same. And the concept is that you learn the details, then you learn to manage people, then you learn to manage engagements, and then you figure out how to sell business, and if you do, you become a partner. The process of this takes many years, though, and I have a good friend right now who he may be on the partner track, and he's seen it all. So that's something to consider. Do you like a clear progression where if you're told to do A, B, and C and you can execute, that you'll do well? Or do you want a, less certain environment where you need to figure out what you want to do and how you want to grow? Lastly, investment banking. So the general concept of investment banking is that companies out there need to raise money, and they have to do this through complex means. On the surface, it's not terribly complex. Generally they use stocks or bonds, and but I guess these instruments can be terribly complex when it comes to how do you offer it, how do you price it, who's underwriting it, what are interest rates, all this kinds of stuff. And to further complicate it, there's so much regulation around this that it's frighteningly complex. So that's where investment banks come in. And I've heard the lifestyle in the iBanking industry is maybe even more intense than public accounting, and you work a lot of hours to build up to a certain level, and then you have a great salary, basically. So the people that can stick it out, they do well. Just as a little aside, I guess, since these are basics, why don't I talk just very briefly about the difference between a stock and a bond, right? So, if a company is trying to raise money, those are kind of the two main ways of doing it, right? And if you're gonna give somebody bonds, that's basically saying, hey, you pay me X amount now, and I will pay you an interest on that money every month for the next 5 years, and at the end of the 5 years, I'll pay you the whole amount back. So the concept here is I can take this money and I can make a return on it in excess of the interest I'm paying you, and then I'll have more than the whole lump sum at the end of 5 years to give you back. The interest also relates to the time value of money, right? $1 today is worth more than $1 tomorrow. And that's kind of the main idea behind the bond. Stock, on the other hand, is less guaranteed payment back, but you actually own a piece of the company, so the upside is potentially larger. Now, if you give me $50 today or whatever, I'll give you 1% of my company. That's, potentially worthless and potentially very valuable, right? And the final piece of stocks is, they can even pay out dividends at some point. A lot of the bigger companies give out very regular, decent dividends. So just like a bond would be earning you regular interest, you can earn regular dividends on stocks. Okay, so that's kind of the basic areas of accounting and finance that I wanted to go over. Again, that's corporate accounting, public accounting, and investment banking. If anyone else wants me to talk about another area, just let me know. Now, to finish off, studies have shown that you learn and retain information a whole lot better if you interact even the slightest bit. So what I'd like you to do is take 30 seconds and comment below, answer a question, okay? What I would like you to say is, first of all, are you considering going into any of these fields, or do you know anyone in them? Pick an area and just give your perspective on what that person does. I think it's pretty funny, no matter what you do, when you try to explain it to friends or family, a lot of times they get a warped idea, but this will help you solidify what these different areas do and hopefully give you a better understanding of it overall.